Hello, this is Nataraja Upadhya. Welcome to yet another week's review of mutual fund performances, which is tracked on a monthly basis. I usually release a blog on this every Saturday. Then, as time permitting, I also do a video because some people don't want to read. So, in spite of my ugly mug face, I hope you will find this video useful if you are not finding it comfortable to read my blogs. So, let us get on with the presentation. So, this is as on the week ending July 5th. So, this is the summary. If you notice, for the last 1 week, all fund types had a positive return for top whether it is top 50 or the overall average, and the monthly returns are also very nice. Let us focus on top 50 equity funds. They gave 16.48% for the month, which is great. And even the annual leaders gave 13.07% for the month. So as a result, annual leaders top 50 gave 81.21% return, and the monthly leaders gave 68.20. Couple of weeks back, this used to be at around 40 level. Now, entire equity mutual fund universe average is 43.38%, which is very amazing. That means if you are just being random and pick some equity funds, you are very likely to hit 40% annual return based on the current market conditions. Basically, the current market conditions are too good, too good to believe that it will continue. Probably post budget session there may be some corrections, but right now let us enjoy this ride. Even the hybrid funds top 50 gave 8.92%, which is kind of a equity kind of return, and annual leaders also gave 8.04%, and the hybrid funds in general across all type of hybrid funds gave 22.93%, and people are very happy with this kind of return just on equity funds, and hybrid funds are giving that. So that is very impressive. Let's not discuss debt funds, boring. Commodity funds also recovered from the correction, and annual average is around 25.25%. Again, that is very good. Now, let us look at the equity monthly top 50. The HDFC Defense Fund with the annual return of 147.04%, appreciated by 27.73% for the month, followed by LIC MF Infrastructure Fund 23.03%. So the marked one which are in green are those where the returns from 1 month to 1 year are all above the average within this top 50. So they are kind of comfortable to bet on. The other are Bandhan Infrastructure Fund with 17.63% return for the month, Invesco India PSC Equity Fund with a return of 16.86% for the month. So equity monthly bottom 50, of course, there will be some funds which will be lagging, and you can see that the funds which are marked are those kind of have a below average return within the bottom 50. Okay, and this is a concern only if you have these funds with you. Otherwise, don't worry too much. Equity annual top 50, again, the ones marked in green for above average return from 1 month to 1 year are HDFC Defense Fund, Invesco India PSC Equity Fund, LIC MF Infrastructure Fund, Bandhan Infrastructure Fund, UNESCO India Infrastructure Fund, Nippon India Power and Infra Fund, DSP India Tiger Fund, Canara Robeco Infrastructure Fund. Equity annual bottom 50, this is basically done to identify the funds which may be recovering. So the funds which are having a monthly return above the average within this bottom 50 are marked in dark blue. They are Franklin Asian Equity Fund with 8.79% return for the month, ICICI Prudential FMCG Fund, then UNESCO India, UNESCO Global Consumer Trends Fund of Fund, Edelweiss Emerging Markets Opportunity Equity Offshore Fund, Motilal Oswal Nasdaq Q50 ETF, HSBC Global Emerging Markets Fund, Kotak Global Emerging Market, HDFC Nifty Private Bank ETFs, certain private bank ETFs, and lot of IT ETFs. So basically, if you are stuck with these funds, this is not the time to sell because they are recovering. So this doesn't mean that you should go and invest because we need to confirm that their trend will continue for some more weeks and let them come to those green row level comfort zone, because you have so many funds which are doing well to invest. So you don't need to take a chance, rather invest on a consistent performer, proven performer. But sometimes you get stuck with some historic investment and you wonder whether to hold or sell. Many of the underperformance are recovering as discussing. So you are better off, wait for a while and recover some, and then maybe you can churn your portfolio. Hybrid funds also did well. Hybrid funds monthly top 50, the one marked in green for above average return from 1 month to 1 year are SBI Magnum Children's Benefit Fund, Bank of India Mid and Small Cap Equity and Debt Fund, HSBC Aggressive Hybrid Fund, Union Children's Fund, Union Retirement Fund, HSBC Multi Asset Allocation Fund, Mahindra Manulife Aggressive Hybrid Fund, Kotak Equity Hybrid Fund. Hybrid funds annual top 50, again marked in green, are JM Aggressive Hybrid Fund, Bank of India Mid and Small Cap Equity and Debt Fund, ICICI Prudential Retirement Fund, HD Hybrid Aggressive Plan, SBI Magnum Children's Benefit Fund Investment Plan, Union Retirement Fund, UNESCO India Aggressive Hybrid Fund, Aditya Birla Sun Life Multi-Index Fund of Fund, Mahindra Manulife Aggressive Hybrid Fund, HSBC Aggressive Hybrid Fund. So hybrid funds had a good return last 1 month. Lastly, we are coming to commodity funds. Commodity funds had a recovery both on the weekly basis and the monthly basis. And this time there is a clear trend with respect to having consistent above average return from 1 month to 1 year. And these are the funds: HDFC Silver ETF, Axis Silver ETF, Aditya Birla Sun Life Silver ETF, ICICI Prudential Silver ETF, DSP Silver ETF, Edelweiss Silver ETF, Kotak Silver ETF, Mirai Asset Silver ETF, Nippon India Silver ETF, UTI Silver ETF, Nippon India Silver ETF FOF, Axis Silver FOF, Kotak Silver ETF FOF, UTI Silver ETF FOF, HDFC Silver ETF FOF, ICICI Prudential Silver ETF FOF, Tata Silver ETF FOF. With a return which is somewhere between around 27 to 30%, definitely commodity funds are good alternatives for fixed deposits. However, I am not betting on them because I am betting on equity funds mostly, and I am aiming 30 to 50% annual return, and therefore I am not taking chances with commodity funds. Whatever I invested in commodity funds, once the equity started recovering, I have moved them to equity. This is for those who would like to bet on commodity. So with that, we are coming to the end of this bulletin. Standard disclaimers apply. This is neither a solicitation or a advisory or a recommendation. I'm just sharing my analysis and what I find here. It's up to you. It's your own decision. Mutual fund investments are always considered risky. So there can be data errors when I download from value research, or there could be human error in my own data processing. You should make your own investment decisions with no need to blame anybody else if things go wrong later. So with that, I come to the end of this bulletin. You can always read the blog at Nat's Fun Corner on Blogger. All my bulletins are available on my standard social network platforms as shown here. So thank you for this. I will see you again next week. But there is one special mutual fund report coming up soon. It's already there in the blog. It is because we have completed June, we are coming to July, second half of the calendar year we are moving. So we want to see how the last 6 months these mutual funds did, especially in the equity space. So that video I am going to release soon. So thank you for your time on this bulletin. See you again. Bye.